Welcome everyone to Best in Interest. This is Shane back for our last stock pick of the day video for the week. We're going to take a look at Accenture. This is out of the information technology sector. Now this is the vested interest stock screener that we will be going through in this video. This is the criteria we will be looking at. It must meet 5 of 8 to make it onto my watch list. Now keep in mind, if a company does make it onto my watch list, that does not mean I am buying. It may mean that I am interested in buying in the future, but it is really just an initial screener. So out of the thousands of stocks out there, it made it through the initial screener, and I want to do more of a deep dive into the financials of the company, looking at their balance sheet, their income statement, things like their debt to equity ratios. Are they paying down debt? Is their revenue expanding? Are their margins expanding? Comparing them to other businesses in the same sector. Doing a discounted cash flow analysis on the company. There's a lot of other criteria that I look at for a company whenever I do a deep dive into their financials. So this is just an initial screener, and don't blindly buy any company that you see me do a review of or that I am buying in my weekly portfolio updates. Make sure you are buying based on your criteria that you have set for yourself for your investing timeline and your overall goals. But you can use this screener, maybe tweak it to be your own. Maybe you like some of the criteria. Maybe you want to add some criteria of your own. Definitely feel free to use this as an initial screener if you'd like. But again, don't blindly buy just because you see me or anyone else on YouTube buying a stock. Make sure that it meets your specific investing criteria and you've done your research. All right, with that said, let's get back to Accenture, www.accenture.com. That's www.accenture.com. And company description, Accenture Plc provides strategy and consulting, Industry X, song, and technology and operation services in North America, Europe, the Middle East, Africa, and internationally. Obviously, I'm in America, so Europe, the Middle East, Africa, that would be international. But anyways, it offers systems integration and application management, security, intelligent platform, infrastructure, software engineering, data, and AI. Everyone, I think, in the data space now says AI, or the tech space has an AI plug, and automation services. The company also operates business processes and designs, manufactures, and assembles automation equipment, robotics, and other commercial hardware products. So they do a little bit of hardware manufacturing as well as the tech space, and really their tech space is kind of more of a consulting, where they meet with the company that they're going to do business with, figure out what they need, and design an application for that specific company, right? They've got cloud-based services, customer service, cybersecurity, data and artificial intelligence. Again, there's the AI, digital engineering and manufacturing, ecosystem partners, emerging technology, finance and risk management, infrastructure and capital projects, learning tools, managed services, marketing experience, metaverse, sales and commerce, strategies. So if you're looking for business strategy, supply chain help, sustainability, talent and organization, technology transformation, right? And then some of the industries that they deal with: aerospace and defense, automotive, banking, capital markets, chemicals, communications and media, consumer goods and services, energy, health, high-tech, industrials, insurance, life science, natural resources, public service, private equity, retail, software and platforms, travel, U.S. federal government, pretty much all of them out there, utilities even. So they're working with anyone and everyone they can. Now, the reason we're taking a look at them, down 0.48% on the day. They closed out the day at $252.94. We are talking about Accenture PLC, ticker ACN, out of the information technology sector. 52-week range as low as $236.67, as high as $398.35. They are within 15% of a 52-week low, under $272 and some change, puts them within that 15%. Market cap of $157.544 billion. Beta of 1.29, so they are more volatile than the overall market. Maybe you can use that volatility to your advantage if you're interested in this company, buying when there's those big pullbacks and holding whenever there are run-ups. Price earnings ratio, PE ratio, $20.11 per share. With a 20 PE, that makes sense for a fast-growing tech company, and perhaps this company is indeed that. EPS, earnings per share, $12.58. Earnings date, September 25th, so coming up here towards the end of the month. Forward dividend, $5.92 per share per year. They are quarterly payers, so divide by 4, though we will see that here towards the end of the video. Current starting dividend yield, 2.33%. Ex-dividend date was July 10th. Looks like they paid out on August 15th. So if you were to buy them now, you would be in line for the next dividend, but you're going to have to wait a couple months to get it. Ex-dividend date, July 10th. Well, we covered that. One-year target estimate, $318.86. So they don't see it quite getting back to its 52-week high. About what is that, $90 off, $97 and some change off from their 52-week high. So not quite back up there, but above 300 and definitely some upside from where it currently sits, at least according to Yahoo Finance, where I pulled this information. Jumping over, looking at the company, seeing if it is potentially undervalued according to dividend yield theory. To do that, we look at their 5-year dividend yield average, 1.42%, compared to the current 2.33%. Or over here where it says forward, 2.33%, same number. Since it is higher than their 5-year average, that actually speaks to potential undervaluation, at least according to dividend yield theory. Now, I like a payout ratio under 75%. They're at 45.58, so it doesn't look like they're in danger of a dividend cut. Plenty of room to continue to expand that dividend over time, pay down debt, make acquisitions, reinvest back into the company, buy back shares, pay a dividend, and raise that dividend as well, which we already mentioned, and which is all the things they can do with free cash flow. And speaking of free cash flow, going back to August of 2021, $8.3 billion in free cash flow, 2022 up to 8.8, 2023 up to 8.9. Looks like a drop in 2024, but we'll talk about that here in a minute. 8.6 billion, and trailing 12 months up to 10.2 billion. So it does look like they're continuing that trend of growth, but keep in mind trailing 12 months does still include part of 2024 numbers. Now, repurchase of capital shares, you'll see 3.7 billion here in 2021, 2022 4.1 billion, 2023 4.3 billion, and 2024, though it looks like a decrease in free cash flow, you'll notice that continue that trend of repurchasing their shares and increased it from 4.3 to 4.5. So you'd have to do the math, but it does look like they did have slight free cash flow growth, maybe flat there, and then continuing that repurchase of shares at 4.7 in the trailing 12 months. But again, keep in mind that part of this is 2024 numbers still. All right, jumping over to stockanalysis.com, another source I go to for information. I am not affiliated with stockanalysis.com. I'm not affiliated with Yahoo Finance, just two sources I go to, and I do recommend two sources, if not three, so the information you are looking at, you can back check it and make sure it is accurate and up to date. They have 21 analysts over at stockanalysis.com that have taken a look at this. They call it a consensus buy. Low estimate of $240. That would represent a 5.12% decrease from where it currently sits. Average estimate of $348.90. That's a little bit higher than what we saw with Yahoo Finance by about $30. And that would represent a 37.94% potential upside. High estimate of $420. That would represent a 66.05% potential upside. You could collect that 2.33% dividend yield if you were to buy and lock that in now. Now, looking at statistics, I like to look at return on capital employed as part of the initial screener and EPS growth. For return on capital employed, I like above 10%. They're sitting at 23.7%, so very nice. They're more than twice what I'm looking for. And EPS growth, I like above 5%. They're sitting at 9.41, and with revenue growth forecasted at 5.79 over the next 5 years. Quarterly payer, as we mentioned, payout ratio of 47.12%. They have it a little bit higher here than Yahoo Finance had it, but still under 50%, well under the 75% I'm looking for. Dividend growth at 14.73%, so nice double-digit dividend growth there. Very nice to see. And with the payout ratio in the 40s, that's a very good combination. Growth years, 5 years. Buyback yield is positive, 0.62%. A lot of times you'll see with tech companies, they dilute you as shareholders. This company is not. They are pulling more shares out of the market than they're issuing, so I do like that. Shareholder yield is positive at 2.96%, which we want to see positive shareholder yield. They do pay off schedule than most companies, February, May, August, November. That's nice. If you're trying to level out some of your dividend payouts, again, get monthly payouts without owning a monthly payer, that's one way to do it. Find companies that pay off schedule. Most companies start their payouts in March. And going back here to January 2023, $1.12, which they paid in February, April. Well, they raised it up in October 2023 up to $1.29. They raised it up again October 2024 up to $1.48. We haven't seen their October raise yet, but I'm anticipating if they're going to maintain the trend of this, I'm not saying they're going to raise it by 14.73%, but if they're going to maintain the trend of raising their dividend, we should see it in October. All right, let's check this one out. Understand the business. Yes, they are a consulting firm that does a little bit of manufacturing as well. Really, they're meeting with clients, different businesses of all different types and kinds and in different industries, and they are tailoring a custom IT package for those businesses. And they do have their big AI plug, so keep that in mind as well. But I think all tech companies do now. Growing free cash flow, I am actually going to give them this check because even though it looked like they decreased their free cash flow in 2024, they did increase their shares. So you could do the math, but I believe they still, maybe it was close to flat, slightly above the year before, but I do believe they had some free cash flow growth there. But if you didn't want to give them that one, you could take that one off. Growing dividend, yes. Double-digit growth. Dividend payout ratio of 75% or less, yes. It was in the 40% range, under 50%. Dividend yield theory says they're potentially undervalued right now. It is within 15% of a 52-week low. Return on capital was over 20%, so check there. Earnings per share growth was over 9%, so check there. So I'm giving them a perfect 8. And again, if you wanted to take off growing free cash flow, it would still be 7 of 8. They definitely are going to go onto my watch list. I'll have to do more of a deep dive into the financials of this company. I have not done that yet. But interesting company, Accenture. Let me know what you think of the company. Is it one you're watching? Is it one you're buying? Maybe it's one you're holding in your portfolio. Let me know in the comment section down below if you are holding how many shares, and are you still buying right now during this pullback? All right, that's really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of Accenture. Let me know what you think of the videos. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like this you'd like me to cover in the Stock Pick of the Day series, drop it in the comment section. I'll work it in on a day that it pulls back. It needs to be a company that pays a dividend, though, so keep that in mind. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you had a great week. Tune back in. I am going to have a couple videos coming out, one either Friday or Saturday, on wrapping up the dividends and options I received for August. So we'll put a pin in that one now that the month is over and we're on into September. And then I also have my weekly portfolio update, and that will come out Sunday morning. So tune back in for those. We'll see you in those videos. Have a great week. I'm not a financial advisor. Nothing in the presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria. Or seek the advice and counsel of a certified financial advisor. For those of you who made it to the end, I really do appreciate it. Watch time is one of the metrics that the YouTube algorithm looks at. If you know anyone, excuse me, that you think that might find value in the content, go ahead and share the videos as well. That's another way to help spread the videos. And again, really appreciate your time and have a great weekend.